Welcome back. Wipro numbers are out. The net profit has come in at 2,235 crore rupees. We were, remember, expecting PAT to come in. We'll get you all the other numbers as well. For now, we have net profit, which has come in at 2,235 crore rupees. We don't know if that's specifically for IT for services for
Well,
the
I think this would be the consolidated because IT services generally we do not get the profit figure. So these would be the consolidated net profit at 2,235 crore. We've got the IT services revenue 12797. I think there's been a mistake. It should be 12,797. So that would be in line with street expectation at 12,797 crore. This would mark a rough growth of close to about 4%. So the only figure that we have, I believe, is the IT services revenue at 12,797 crores. So just trying to get more details in, we were working with a dollar revenue growth of roughly about 2.8%, a constant currency growth of about 3.1, 3.2%, and this would have been higher than what the street was anticipating. This would be higher than what peers had reported because largely it would have included the acquisitions that they had done, both of Silent AG as well as VTOS Group, which would have contributed about 2 months. So the bottom line, top line growth looks good. Okay, I'm just trying to open the press release. So give me a minute and we'll have greater details on what the numbers.
So for now, it looks like it seems to be an inline set of the numbers. They've been corrected on your screens at 12,796.7 crore rupees. That is the top line. That is the IT services revenue. Remember, you're expecting around 12,780 crore rupees. So this is definitely in line with what we were expecting. Even on the bottom line, it seems to be in line with what we were expecting. We'll get you some reaction going as well. But it'll be important to understand the other parameters like volume growth, like margins, and to see if they have come in line. Rima, do you have any of the other figures with you? We're still awaiting the press release to...
Okay, what I have is the board has also approved a buyback proposal for up to 4 crore shares of a face value of 2 rupees each, which represents 1.62% of the total equity from the shareholders on a proportionate basis. This would be a tender offer at a price of 625, which means it is at a premium to the 600 rupees that the stock closed at. So the company has approved a buyback. This is a tender buyback, which means at a fixed rate, not up to. It will be at a fixed price rate of 625. The total amount they will be buying back is 1.62% of the equity, and the total amount that they will be buying back is 2,500 crore. This, a lot of the people believed, is largely a substitute for for the dividend, because now HNIs are going to be taxed a lot more for dividends. So a more tax efficient way of returning money to the shareholders would be buyback. So we'll try and get the buyback thing also on your screen. We got the margins at 20.1%, and that is in line with street expectation. So the company has managed to maintain its margins on a quarter-on-quarter basis. So margins have come in line with expectations. Do you have the dollar revenue growth?
No, we don't have the top line yet. I'm still trying to get the exact release from the exchanges. But prima facie, if you look at the basic headline numbers, seems to be in line with expectations, seems to be a fairly good set of numbers right now.
But the key for Wipro will always be what the company's delivered in the top line as well as what their guidance is. So stripped of that, it's very hard to comment. They've managed to maintain their EBIT margins in a band of 20 to 21% for the last so many quarters. In fact, it's been in a band of 21 to 20% at least for the last 6-7 quarters now. So margins has not been a worry. The worry has been on the top line, and on that we still don't have details.
Okay, so while Rima goes through the fine print of the press release, let's bring in Ravi Menon of Elara. Ravi, we are still awaiting the exact figures for the dollar revenue growth, but on the top line, on the margins at 20.1%, is that in line with expectations? And the top line also seems to have beaten or just come in line with expectation.
Yeah, I think the revenue in rupee terms is slightly ahead of what we expected, and margin is exactly in line with what we expected at 20.1.
Okay, but at the 20.1% band, are they in line with what you had been projecting? Because they've been trying to scale up margins. What do you think would be the exact impact of this quarter?
So I think this is partly due to the 1 month integration of health plan services which they acquired. So that should be part of the reason why there has been a slight impact on margins.
What would you comment on the buyback? Because the buyback is a little over about 2,500 crore rupees. We were awaiting the details of the buyback. How do you expect the street to react to the buyback figures? You're expecting possibly a slightly higher amount as a whole.
I think this is fair. They should have a lot of cash left, for acquisitions. And I think this is a time when the industry is consolidating. So, I think it's prudent to keep a lot of cash on hand to make these strategic acquisitions. So the buyback is a good thing, but, it's just a signaling mechanism, right? It's not intended to be really a long-term support for the stock.
Yes, indeed. The company has done 4 acquisitions in the last 1 year. It started with Designate, then you had VTOS, Silend AG, as well as Healthcare Plan Services, which was a big acquisition of $460 million. So I guess they would like to keep their powder dry and hold on to some of the cash reserves for a future acquisition. These acquisitions that the company has done has largely been to fill up either geographical space, the geographical gaps, or sometimes even the portfolio gaps, whether it's been in the digital space. We still don't have the dollar revenue growth or what the company's guidance is. So the only figures that
Yeah, do you have any other additional details yet? So essentially dollar revenue volumes we don't have yet. Okay, IT service EBITDA has come in at 2,566.5 crore rupees. That's versus Rima's expectation of about 2,574 crore rupees. While we get the other figures, let's go across to Sarabjit Kaur Nangra of Angel Broking, who's joining in on the show. Sarabjit, we have the margin figure 20.1%. We don't have the exact dollar revenue figure, but rupee revenue seems to be in line. Is this meeting your expectations?
Yeah, broadly the numbers seems to be in line with our expectation on profitability and rupee revenue. Yeah, broadly in line numbers. So far, whatever I've seen is broadly in line with our expectations.
In fact, let's just get in the expectations from all our guests while we await the revenue numbers. Let's also invite Karan Tarani of Dollar Capital. Karan, if you could take us through what your dollar revenue expectation is, as well as for the Q1 FY17 guidance.
So we expected dollar revenue of 1904 for the Q4. Not got the number on hand, and for Q1 we expect a guidance of 3.5 to 5.5%.
Okay, let's ask the same question to Ravi Menon. Ravi, walk us through your expectations.
So I'm looking at 3% QOQ growth this quarter in CC terms and 2.1% in dollar terms, including 1 month of integration for health plan. And next quarter, hoping for 3 to 5% guidance, including the additional 2 months of health plan, but not including VTOs. VTOs, if we include that, then that should be a little higher.
Okay, so that would be going up to 3.5 to 5.5% if we include VTOs. And Sarabjit, same question to you.
See, for the quarter dollar, we are looking at around 1904. And for the next year, I guess, quarter on quarter, I'm looking at for the first quarter Q on Q guidance to come in the range of 4 to 5%. So I guess that should be the guidance.
4 to 5%, so that would be on the higher side, considering that Q1 is generally a weak quarter for Wipro, and at least in the last 3 years, I was just looking at the historical data. The Q1 guidance for the last 3 years, even at the upper end, did not exceed 2%. Of course, there will be a lot of contribution of the acquisitions that they've done, an extra month on account of HPS as well as VTOS, etc. So that will aid. But I guess the 3 to 5% will positively surprise the street. But Karan, we've seen the stock run up quite a bit. It's been gaining ground for the last 5 or 6 trading sessions. If you compare it to the February lows of 520, it's now seen a rally of 15%. What all is priced into the stock in terms of dollar revenue as well as the guidance?
I think dollar revenue FY17, given the acquisition of HPS which they have done, we expect dollar revenue in the range of 10.8 to 11% for FY17. So that's more or less priced in. And on organic basis, obviously the growth will be about 7.5 to 8% because the HPS acquisition gives about 3.5% kind of an impact on FY17 revenue. And also in terms of margins, it's largely priced in because HPS will have a negative impact on the margin range of 50 to 80 bips going ahead. So that's also more or less priced in. But we don't expect any movement on the upward for the stock from here on, because valuations are anyways capped at about 16.5 times FY17, and they appear to be fair. So we have an accumulate rating on the stock, and not known the numbers as such, largely in terms of dollar revenue or in terms of guidance, but yeah, we would maintain that basically going ahead. We don't see any scope of earnings upgrade for Wipro from current levels.
Let me ask you about the margin as well. Margin seemed to be in line with what most people were expecting. Given that they had several levers as far as margins are concerned, or rather pressure points as far as margins are concerned, are you expecting margins to outperform in the next coming Q1, Q2 at least? Sarabjit, can you hear me?
Sorry, this was for me. Okay.
Yeah, so in terms of margins, are you expecting them to have more levers to be able to scale up margins from the 20-21 band?
In near future, because of acquisitions, I doubt whether they have huge levers available. But I guess in the long term, given the way in comparison to its peers, I think that Wipro has a lot of levers to, in a long term, improve the margins situation actually. So that's one thing that I think if management is more clear, the way Infosys have come out of its, and taken a stand in terms of improving profitability and volume growth, delivering on both fronts, so Wipro can also position itself that way. I think it will definitely lead to good stock returns also.
Ravi, considering that the buyback price, this is a tender buyback, is 625, do you believe that the stock should be headed at least to those levels, or a 1.7%, a buyback of just 1.7% of the outstanding equity shouldn't move the needle of the stock too much?
I think it's just a signal, right? So it's a positive signal, and we think that the company, once the energy sector turns, it'll gain traction. That was something that shaved off quite a bit of their growth over this last year and a half. So once that at least stabilizes, we should start seeing Wipro, being in the active consideration set for people. So we prefer Wipro ahead of TCS and Tech Mahindra, and we've been holding to that stance for some time now, for the last 6-8 months at least, and we continue to maintain that.
For the benefit of our viewers, what Ravi is saying is that energy is a huge part of the company's portfolio. It contributes roughly about 14 to 15% of the company revenues, and the energy revenues in dollar terms have declined for the last 5 quarters now. So on account of the decline that we've seen, the huge steep decline that we've seen in crude prices, the discretionary spend in the energy vertical has come down, and that has impacted Wipro far more than peers, because for peers it was a single-digit contribution to the overall revenues, but for Wipro it was a lot higher, closer to the 15% mark. That said, this quarter we don't have the details, but going by the company's own guidance of 2 to 4%, they're quite likely to end the year with only a 4% revenue growth. And compare that to a 7.1% that TCS saw, a 9.1% that Infosys saw, and this would be the fifth straight year that Wipro would have underperformed the industry. The last time the company had outperformed the industry was in FY11, when they had a dollar revenue growth of 18-19%. So that was slightly higher than the industry. But in the last 5 years, the growth for the company has faltered on account of various reasons. They've not been able to mine their clients well. Their exposure to BFSI, which has been a high growth vertical, if you look at it on an aggregated basis over the last few years, their exposure has been lower than what it is to peers. Plus, they faced a lot of organizational challenges. There have been a lot of people in and out. At one point, they even tampered with the 2 CEO bid. So the company, for the last 5 years, has underperformed. Q1 FY17 guidance will be the key to hold for what the company has in store. There is a new management in store. Remember, Abid Ali Nimuchwala joined the company on 1st of April 2015, but he took over as the CEO only on 1st of February 2016. So he's been in the business, he's been in Wipro now for 9 months. So I think hopes would be on the higher side, but that said, the company is still likely to underperform the industry in FY17, going by what the street expectations are. Right now, again, we don't have too many details. The only details that we have for the benefit of our viewers, let's quickly run them through. The IT services revenue growth has come in at 3.9%. That is in line with street expectations. The company has also delivered EBIT margins of 20.1%, unchanged on a quarter-on-quarter basis, but that too was expected by the street. The company has also announced a tender buyback at a price of 625 per share, so at a premium to the 600 rupees that the stock is closed at. But this will be for a buyback up to 2,500 crore rupees, and that amounts to 1.7% of the outstanding equity. So based on the details that we have, this is largely what the street had anticipated, though the total buyback amount, I think the street would have liked to see more, because if you're substituting a buyback for the dividend, then last year you gave out a dividend of 3.5 to 4,000 crore rupees. Maybe there is more coming. Maybe, of the total amount that they want to return to the shareholders, buyback is only going to be a part of it, and the rest will be done by, via the dividend route.
There has been a dividend that they have announced this time. So there's a final dividend of 1 rupees per equity share, of par value 2 rupees each to the members. So there has been an additional dividend that they have announced. But weren't we expecting a larger dividend, 4,000 crore rupee plus roughly? Karan, come in on this. Would the market be disappointed that the buyback hasn't been larger than, we were expecting about 4,000 crores or upwards? Karan, that question was to you.
Yeah, the buyback is slightly lower than expectations, and in terms of dividend also it is a disappointment, because you would actually expect, a large company like a Wipro, basically, who's sitting on a huge cash surplus, to give a better kind of a dividend. And we believe that capital allocation has been a problem for, most of the large cap IT companies.
We await the important dollar revenue figure. Sarabjit, come in on what Ravi was saying earlier, that he would prefer Wipro to a TCS even now. How does Wipro stack up against, their immediate TCS Wipros?
See, Wipro, earlier we had a buy because Wipro was a beaten down stock just a couple of quarters back. So now it's seen a good amount of run up. So just on FY17 numbers, the upside looks very not very huge from these levels. And its comparison to TCS, I would prefer TCS at this moment, at the given juncture, if I have to compare TCS and Wipro.
What would you say? Stack up Wipro against an HCL Tech, TCS and Infosys? Karan, that question was to you. Stack up Infosys, TCS, Wipro, HCL Tech. Where does Wipro stand against its peers right now?
Yeah, so we basically, prefer HCL Tech and Infosys over TCS and Wipro. So HCL Tech and Infi are our top picks in the large cap IT space.
Okay. Wipro is also trading at a significant discount to its peers, and that's on account of the underperformance that it's seen over the last 5 years. So if you see in terms of PE multiples, the street is working with an FY18 EPS of roughly about 43, 44 rupees. So at a current market price of 600 rupees, so that would turn out to be a P of close to about 14 odd times, whereas peers would be trading at 17, 18 times F518 PE. So that's the forward PE. So the company is trading at a discount, but that is on account of the fact that its top line growth has been in single digits since FY13. So it's been 4 straight years of a single digit growth that Wipro has seen in its top line, which is why the company is actually trading at a discount to its peers. So these are the details that we have. A revenue growth of 3.9%, EBIT margins maintained on a quarter-on-quarter basis, and margins for the company have been in a band of 20 to 22%, at least for the last 7 or 8 quarters. So generally, they've managed to maintain their margins. The company has announced a buyback at a price of 625 rupees per share. So that is a premium to where the stock is currently quoting at. So it would be a premium of close to about 4.5 rupees from the current market price, but the buyback amount is only up to 2,500 crore rupees. That's 1.7% of the equity. 2,500 crore rupees is slightly lower than the amount that they could go up to. So Wipro could have done a buyback up to 10% of the shareholder reserves, the paid up capital as well as the free reserves, and go going by the FY15 audited statements, the total amount of paid-up capital as well as free reserves was close to about 35,000 crore rupees, which means 10% of that the company could have easily done a buyback of 3,500 crore rupees, but the company has chosen to do that for 2,500 crore rupees. So that would be the only bit of a niggling worry. We're awaiting the revenue growth figures. Remember, the company has anyway given us a guidance of 2 to 4% for this quarter. So let's assume the company delivers in the middle of that, which is largely what the consensus expectation is. Yeah. It would still mean that the company's FY16 dollar revenue growth would be closer to the 4% mark, significantly underperforming peers for yet another year. I think fifth one in a row. They made a lot of acquisitions, so that should slowly start contributing, but there will be integration issues. And I think margins is going to be a bit of a worry because, for one, the company did that health plan acquisition, HPS. It was a big acquisition at $460 million, but that was, the company is operating at lower margins. In fact, I remember very clearly the management commentary itself at that time during the acquisition was that it will shave off their margins by about 50 to 80 basis points in FY17 because of integration, as well as the fact that the company is operating, the acquired company is operating at lower margins. So there would have been a 50 to 80 basis points decline. And plus these we've seen that in the case of TCS as well, where the company disappointed the street on its margins, the investments that you have to make. Maybe pricing is getting a lot more aggressive. So all that maybe will be weighing on the company's margins in the coming year. So I think FY17 margins will also be critical. But for the stock, for it to, start at least trading close to where its peers are, it needs to get its revenue mojo back. It's been one good quarter followed by one bad quarter, but the company has not been able to get out of the stagnating revenue, the stagnating revenues that it's seen in the last many years.
Karan, let's go across to all our guests in terms of what they're expecting. We are expecting the press conference to start now. We'll get all the other parameters. We still don't have the exact dollar revenue figure, but coming to everyone one by one, Karan, first to you. What are the specific commentaries that you're expecting? Margins in line, yes. What are specifically the comments with respect to volume growth, with respect to vertical demarcation and BFSI energy growth that you're expecting?
So specifically, I'm expecting commentary on the energy front. So if you see, they clearly mentioned that last quarter the energy vertical would stabilize, and that really happened on a constant currency basis. So, and they expect improvement, going ahead in the next few quarters. So, any commentary on the positive front for the energy could be a positive for Wipro. And in terms of margin, expecting more of levers as to what could be the levers for Wipro going ahead in terms of margin improvement, or what could be the levers actually which could offset that 50 to 80 bips negative impact of the SPS acquisitions. So yeah, just await commentary on the EBIT margin front on that.
Ravi, when do you believe that Wipro will be able to hit industry growth rates? Now that we've got a new management in store, they've made a lot of acquisitions. When do you believe the growth will be close to industry growth rates?
We think FY18, with the help of some large deals in energy, they should be able to do that. This year, we believe, will still be a year where they'll be coming out of this and going into the integration mode. So there is still some work to be done, but we think that they are on the right track.
Typically when the new management comes in, and Wipro has seen multiple management changes, typically there's always a time that you would like to give them to kind of handle the new management, realign the system. So Sarabjit, to you, how long would you give Wipro to integrate systems, change the top deck and restructure operations, if at all?
Well, see, whenever change happens, normally a new management means a new kind of operating system environment and a new ideology, as we have seen in case of Infosys. Now, with respect to Wipro also, we are expecting that kind of a commentary to come through the new management. So probably FY17 outlook will, in some form, I guess, will mark some in terms of language.
We've got the numbers. 1882 is what the company has delivered in terms of the top line. 1882 is actually lower than what the street was anticipating. So this is a bit of a disappointment. That's not going to grow down too well. 1882 would imply, I think, I'm just trying to calculate what the growth
we were expecting $1,890 million.
So this is just a growth of 1%, is that it?
1.1% roughly, right?
Yeah.
So we were, essentially the guidance was 2 to 4%. pretty much all the expectations rounded up, their guidance being anywhere between 2 to 4%.
Sorry, my apologies. The top line growth has come in at 2.4% at $1,882 million. Now that is about 40 basis points lower than consensus expectation. So that's not gone down very well. The company has delivered a constant currency revenue growth of 2.7%, and this is within the company's guided band. You always need to compare the company's constant currency revenue growth with the guidance. You don't compare the dollar revenue with the guidance because the currency moves through the quarter. So constant currency revenue growth has seen is up 2.7% on a quarter-on-quarter basis. So slightly lower than the middle end.
Yeah, we have the guidance figures. So for Q1 FY17, dollar revenue is expected to be between 1,901 to about $1,939 million. So that would make it what, about 2 to...
It's a 1 to 3% growth guidance that Wipro has given, and this is a big miss. So Wipro guidance is disappointed yet again, because this, I believe, would include the acquisitions that they've done. So the organic growth for Wipro in Q1 is going to be much lower. 1 to 3% is Wipro's Q1 FY17 guidance. Compare this with street expectations of at least 2 to 4%, and some were going as high as 3 to 5%. No one believed that the company will do a 1 to 3% growth in Q1 of FY17. We take the fact that generally Q1 is a weak quarter for the company. They've not delivered too much. If you remember, last year in Q1 the company's growth was only 1.1%. In the year prior to that, it was again 1.2% thereabout. But they've made a lot of acquisitions like HPS, VTOS, which would have contributed to the company's growth in Q1. So including the guidance, if they've just given a 1 to 3% growth, that's a bit disappointing. Because many people believe that I think the acquisition itself will contribute about 1.5% thereabouts. So on an organic basis, it's actually guiding for a degrowth at the lower end and very marginal growth at the upper end. So Q4 dollar revenue growth at 2.4% quarter on quarter, lower than expectations. Q1 guidance of 1 to 3% is also not going to go down well with the street. And I think the kind of run-up that we've seen in the stock in the last 4-5 days, I think will come in for some amount of pressure. What could support the stock price is the buyback announcement and the tender buyback price of 625.
Okay, let's bring in all our guests as well. Ravi, coming to you first, 2.4% on the dollar revenue growth, 2.7% constant currency, and guidance of just about 1.3%. Is that significantly disappointing versus your expectations?
No, I was expecting, about 3% in constant currency terms. So 2.7% is not too far off from there. It's a little disappointing, yes. And I think, the guidance is also a little disappointing. But we have to hear out what they have to say. What are they factored in for cross-currency, or are there any specific issues maybe in energy again that they're looking at? So I think we'll wait for the commentary. But for prima facie, I'd say this is disappointing guidance at least.
Sarabjit, coming to you, guidance front, 1.3% of a growth in Q1, specifically given the fact that Q1 is a seasonally strong quarter. How much of a disappointment would this be for the stock, and what do you think would be the parameters as to why they have a fairly cautious guidance in Q1?
In terms of, definitely it's very disappointing actually, going by the guidance, given that they have done a couple of acquisitions and need to know what has gone into actually giving that guidance. But I think it still underlines that the base business or the base momentum in the business is not yet strong, as at least most of the companies have gained, and Wipro is still lagging there actually. Prima facie, that's what it's indicating, and that's very disappointing actually.
Karan, same question to you. Guidance of 1 to 3%. Clearly, does that show that Wipro is still struggling when it comes to its core businesses?
Yeah, I guess it's going to struggle in terms of the guidance given, because if you see the HPS impact for Q1 would be in the range of 2-2.5%. So clearly you're seeing organic growth of about 0.5% expectation by Wipro. So that's clearly a negative. And considering the performance in this quarter, 2.7% constant currency growth is also a negative, because if you see in terms of acquisitions of Cellnet and HPS also had some kind of impact of 2-2.5%. So again, this quarter also the organic business had not grown, despite H2 being seasonally strong for Wipro in the last 2-3 years. So I mean, it's a negative on all fronts, and if you clearly underlying factor would be the traditional business which would be suffering, for Wipro, and that's probably one of the reasons why the growth has not been good.
Ravi, how do you expect the stock to perform tomorrow with these kind of numbers and the buyback announcement?
So, I think that there is a slight correction. I think HPS would have been only about a 1% impact per my calculation. So that's correct. I mean, the core business still has done about 1.7%, QOQ in CC terms, which is not too bad, compared to the peer group. So
Didn't there have been a Cellent AG contribution as well?
Too off. I think, it'll all be about the commentary.
But wouldn't there have been a Cellent AG contribution to Q4?
18 to 20 million.
And what about the stock? And how do you expect the stock to perform tomorrow?
So I'm saying that it'll really depend on how they explain the guidance. I think this quarter itself doesn't really look bad to me. So maybe minor negative. That's what I'd say.
Minor negative. Sarabjit, same question to you.
I think it will react the way it's run up. I think the reaction towards the downtrend will be sharper, I guess, because the run up has been very significant in Wipro actually. It was building hopes of new management coming in and definitely transformation happening. So my thinking is the way it's run up, the reactions will be sharper.
Okay, that seems to be the overarching view. Karan, would you like to come in on the stock performance tomorrow and the medium term?
Yeah, it would be a weak opening tomorrow. I mean, you could see a good sharp downside, and in the medium term also we don't expect any performance from the stock because the next quarter guidance is also weak, and we expect Wipro again to underperform the larger IT index basically.
Okay, so we have a quote from the management, from the CEO, that is Abid Ali Nimchumala, who just took over in April. Not much in terms of segment breakups, etc., but they've said that their focus is to drive growth in the run business through integrated service and hyper-automation, while gaining leadership in the change business through investments in digital and consulting capabilities, IP-based platforms and products, and creating differentiated domain solutions for non-linear growth. In a way, they have been in the process of changing and moving and streamlining the digital vertical. So clearly the changes that they are witnessing at the top tech and specifically in the businesses are showing in. Rima, let's take us through the entire numbers. Not a very great quarter, not a very good outlook, but any saving grace that we can expect from the management commentary, which is expected any minute from now?
Well, let's hope at least. I think prima facie this is a bit of a miss. First, let's run our viewers through the basic numbers. Dollar revenue growth 2.4% QOQ, lower than expectations of 2.8%. Constant currency revenue growth is 2.7% at the lower end of the company's guidance of 2 to 4%. Margins have been maintained at 20.1% QOQ. The big miss is the company's guidance in Q1 FY17, which stands at 1:3%, lower than street expectations of at least a 2 to 4% growth. The only saving grace is the company's buyback announcement, because it is the tender buyback price is set at 625. That's a 4% premium to where the stock closed today. However, I think a lot of the good news about the buyback is priced in. If you see the stock performance, the stock closed at its highest level since 5th of October 2015. It's had 5-6 days, good days, positive closes on the trot. It's now at a 600 rupees. So I think a lot of the good news, especially the buyback, is also priced in. Right now, you've got incremental negative news in the form of the Q1 guidance. So my sense is that the stock could be under pressure. With respect to management commentary, how will they be integrating the various acquisitions? What kind of a margin impact will they see in FY17? When will growth come back? What was the reason for a muted Q1 guidance? What will be the contribution of the acquisitions in Q1 FY17? Their outlook on energy, on digital, all the underlying mining will be closely watched.
Okay, some more details trickling in before we wrap up. 16.1% is the attrition, and the company has signed about 119 customers. There's a segment breakup as well. BFSI down by 0.9%, energy down by 0.6%, telecom 0.2%, manufacturing up by about 4.8%, healthcare up by about 13.4%. So the pressure in energy and BFSI clearly continuing. Telecom also very flattish. Healthcare, manufacturing the only saving grace, but the fact that BFSI and energy are down is probably why there has been. Do you have any other details, Rima?
Well, energy is down 0.6% on a quarter-on-quarter basis in dollar terms.
Yeah.
But I think on a constant currency basis, energy has reported a growth of 1%. So that is a bit of a positive. Where we've seen muted growth, as you pointed out, has been in global media and telecom. Even on a constant currency basis, it's just a growth of 0.1%. Underperformance seen yet again in BFSI. So BFSI has declined by 0.9% in dollar terms, by 0.3%. It's a decline of 0.3% in constant currency terms. So that has taken a bit of a hit. And retail consumer goods too has underperformed the industry. In terms of individual geographies, it's APAC, which has underperformed. America too, which had a strong growth in the prior quarter, I think, but that has underperformed a tad bit. And in terms of practices, you can see product engineering is a bit weak. Application services has seen another weak quarter. What's done well for them is the business process servicing. So weakness seen primarily in healthcare as well as in retail. Energy, at least in constant currency terms, has shown a growth of 1%. So that we can take as a bit of a silver lining.
All right, completely out of time on this bulletin, but remember the management will be talking a very short while from now. We'll get the commentary in terms of where the trajectory is headed, where energy is seeing pressure, and if at all there is about to be some kind of upside going forward. Thanks for watching this edition of After the Bell.